Credit scores are funny things. They can feel like a total mystery until you actually check them. And if your score comes back lower than you hoped, don't stress. Here are 9 simple tips that can help you give it a real boost. First things first, review your report. You can pull it for free once a year, so take advantage of that. Look for any errors or surprises that might be dragging your score down and dispute anything that doesn't look right so it can be corrected or removed. Pay on time. It sounds obvious, but it's the single most important factor in your credit score. Set up a simple system to track your monthly bills, use reminders for due dates, or even automate payments through your bank so nothing slips through the cracks. Aim for 30% credit utilization or less. So what does that mean? It's the percentage of your available credit that you're using. For example, if you have a $10,000 credit limit, try to keep your balance at $3,000 or less. Keeping your usage low shows lenders that you're managing credit responsibly. Limit your credit inquiries. Soft inquiries are fine. These include checking your own credit, an employer running a background check, or those pre-approved credit card offers you get in the mail. The ones to watch are hard inquiries. These happen when you apply for new credit, like a credit card, a mortgage, or a car loan. One here and there isn't a big deal, but several in a short period of time can drag your score down. Boost a thin credit file. A thin file simply means you don't have enough credit history to generate a solid score. The good news is that there are ways to build it up. Some programs can use your banking history, not just your credit accounts, to help strengthen your score. Keep old accounts open. When you close an account, you lower your total available credit, which raises your credit utilization ratio. That can hurt your score. Keeping old accounts open, even if you're not using them, keeps your available credit higher. Plus, the longer you've had an account, the more it helps your credit history, and that long track record is a big boost to your overall score. Deal with your past. If you have past due accounts, charge-offs, or anything in collections, take steps to resolve them. Paying them off can give your score a modest boost and shows lenders you're getting back on track. Just remember that negative information can stay on your report for up to 7 years, and bankruptcies can remain for up to 10. The sooner you address these accounts, the sooner you can start rebuilding. Consolidate your debt. If you have multiple debts, a consolidation loan can sometimes make sense. It lets you combine everything into one payment, often at a lower interest rate, which can help you pay things off faster. Use credit monitoring. It's easy to see how your credit score changes when you use a service. Many are free and can help prevent fraud or identity theft by alerting you to new activity. Improving your credit score takes a little diligence and planning, but it's absolutely worth it, especially if you're preparing for a big purchase like a home. The difference in how much you qualify for, combined with the interest rate you can get, can have a huge impact on your long-term costs, especially for first-time buyers. If you want to dive deeper or see where you stand, let's talk. To find a loan advisor near you, visit apmortgage.com.